It's still too early to get back into gold and silver, says my next guest. David Gurwitz of the Charles Nenner Research Center joins me again on Kitco News. David, thanks for being back with us.
My pleasure. Always a pleasure to be on Kitco. I enjoy you guys, and I enjoy the people that watch you that write to our site, which is charlesnenner.com.
Thanks, David. So let's dive right into it now. I get your daily research notes, and what really struck me was how you said it's still too early to get back into gold and silver. Why is that, David?
Again, you know how we work, Danny. It's all based on cycles. The news follows the cycles. So people went crazy the other day when the gold was up 37 points as if that was a thing. And according to us, we sent out that day, we're looking for a low in gold the end of November. Same with silver. So the move's only a bounce. We have a short-term buy signal only on a close above 1330. And gold was around 1314 at the time. So it's still on a sell signal to us, and cycles are down and can actually still retest 1200. So so fundamentally, which we think about also, although we think cycles are more fundamental than what people call fundamental, gold has no reason to go up now because there's no inflation, and the Fed's buying of the treasuries is taking away liquidity. And keep in mind, our system called the top almost 2 years ago at 1900. And a lot of people said then, I'll wait for the long term. And we said to them, you're going to feel pain in the long term if you wait 18, 17, 16. And then they started to feel pain, as you know better than I do. So it's not really going to take off, according to us, for several years, although it will go back to its highs and even higher. So people have to decide how they want to live with that information, assuming it's true.
David, and let's focus on the short term now. When you say it's going to hit a low in November, is that a low for the year?
Well, when you say yearly, it's based on a bunch of cycles. It's a very good question, by the way, based on daily cycles, bottom, weekly, and monthly. So really, it's a very strong low. The question is, how much does it go from that?
And how low are you anticipating?
Could go to 1200. So that's why we wouldn't go back in now. When we have the comfort to be out now, most of your listeners, I would assume you have a big listener base. What percent actually have gold or gold stock positions? Probably most, whether long or short. So I would wait if they're looking to go long, and if they're in and want to lighten and rebuy, then for short term, that's what I'd recommend.
David, when you say the fundamentals aren't in place, how about the fact that the U.S. will not be tapering anytime soon, at least? Wouldn't that help gold prices?
Well, you know, Danny, the way we look at things, we take in each individual data series and look at it separately. So we don't think A influences B. And then afterwards, the news people come in and try and figure out how they think A influenced B. But since you're asking this, let me talk about bonds, because that obviously connects. We see bond prices continuing up to the end of the year, and then afterwards they're going down, so rates are going to go up. So if people say, well, as long as the Fed keeps printing or buying, there will never be a rate increase, we don't agree with that. Now, obviously, 3 years ago, we were begging, I think it was 3 years ago, could be slightly less, we were begging people to buy the 10-year at 4%. The 10-year was selling at 4%. People said, how much lower could it go? Now, obviously, bond rates have come down the last 30 years. We think they're going to go up the next 30. So to say just the Fed constantly buying for the next 10 years keeps rates low, we don't agree with that. Therefore, the assumption that they're doing what they're doing will keep a suppressed bond market, and that implies gold will go up. We don't hold by that either, obviously.
Well, you know, as news people, David, we're always trying to help make sense of things, but let's look at gold for a second. You're looking at a close above 1333.
Well, we're saying a short-term buy signal only on a close above 1330. But again, it will only be short-term, so I wouldn't take the buy signal unless you're a good trader.
So are you bullish on the U.S. dollar now?
We are bearish on the dollar starting next year, end of first quarter into second quarter.
All right, David, and let's get some thoughts on silver. You were looking at 2250?
Correct. Let me take a look and see what we said. So it's too early to get in. Daily cycles for silver project a low by the end of October, whereas gold is the end of November. A close above 2250 is needed for a short-term buy signal. Again, we give this information for traders and investors and sovereign wealth funds and hedge funds and family offices and people. They do what they want with it. We don't manage money, but we, if they ask our opinion, say, I'd stand on the sidelines now if you're not in, because there's no clear direction now based on the cycles and our targets.
So, David, before I let you go, what are you buying right now?
Good question. Let me go zip through everything. Stocks are topping. And anyone who writes in, we did a whole stock analysis yesterday on a bunch of different stocks. Most of them are topping, so we certainly don't want to be long stocks now. We expect there's a moderate downturn going back up into the first quarter. And then next year, not even at this level, it's going to begin a descent for many years. So we don't like most stocks. Bonds, we're long bonds now until the end of the year. Gold, we're waiting. Silver, we're waiting. Crude, we called the top at 117, and we think it's down now. Though we're about to short nat gas, so that's a trade, not an easy trade. And then we talked about the yen is topping again, very difficult trade. The euro yen's testing high. So there's a bunch of stuff, not too much to do right now, according to us, which is also a discipline for people to not jump into things. But buy the research and they'll get to see us.
David, thank you so much for being with us. David Gurwitz of the Charles Nenner Research Center in New York. David, thank you.
Thank you, Danny. I look forward to being back on again.
And thanks for watching this edition of Kitco News. Email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching.